But we also had Firstsource that reported their numbers as well. And Prashant, an interesting set that came in from the company.
Well, IT is an interesting space, isn't it, Vinny? And, it's been somewhat tough. We've had many managements joining us talking about, of course, the big talking point, which is AI and what is it doing to existing models, profitability, etc., etc. So Firstsource is the company that I'm talking about for now. So they've reported a decent set. Profits are up about 5% on a sequential basis. The company is guiding for FY26 EBIT margins in the 11.25 to 12% range. And actually, if anything, on the top line revenue front, they've upped their guidance. Mr. Sanjiv Goenka is now joining us, chairman of Firstsource Solutions. Mr. Goenka, great to have you with us on CNBC-TV18. Good afternoon. It's always good to see you, sir. You're, the world's going one way, you're going the other way, if I can put it that way, in a good way. You've upped the
journey.
Go on, sir. Go on.
It's about actually increasing revenues and increasing margins. And we're doing this successfully. And we hope to continue this trajectory going forward. This year looks good in terms of revenues. It looks better in terms of margins. You've just highlighted our guidelines for margins. And what's very good for us, I think, is the deal wins. Last year, we had $434 million of ACV wins. The first quarter, we've had $95 million of ACV wins. Our pipeline today stands at $1.1 billion, which is at least a 40% higher than it's been in the last several quarters. And our win to pipeline ratio is about 54%, which is also very healthy. So that is all auguring very well. And the whole un-BPO campaign, the whole un-BPO move is working extremely well. So where we are using AI along with conventional BPO, I think the whole thing is working. And if you see our headcount, it's remained constant, but revenues have gone up. So productivity has gone up effectively.
No, absolutely. So you're now saying revenues for the full year, just to get the basic numbers out of the way, will grow 13 to 15%, sir, in FY26. This compares to 12 to 15%, which was the number earlier. So, it's a slight, the range moved up just a little bit, right?
So, well, this is what we are giving as our guidance, but I think we are getting very good traction with customers. And the very fact that we won $434 million of ACVs last year, a significant amount of it will translate into revenues from this year onwards. So this will not have a full year impact, but will start having impact, a greater and greater impact as quarters go on. So that in itself gives us a significant upside in terms of revenues.
You've done a bunch of acquisitions as well, right? I think there were 3 acquisitions you did in FY25. In July, you've acquired another company, Past Due Credit Solutions. That's a UK-based company. Could you give us an overall sense of, as all these acquisitions are fully integrated and you do what you... in terms of scaling up and sort of putting your people in, and what will these 6 acquisitions sort of contribute in FY26? Just give us a scale or the size of the business you're expecting from these.
So this is Past Due Credit Solutions gives us an entry into the UK public utilities market and the government segment. So water and those kind of utilities. So our acquisition cost is roughly about 22 million, and the revenues are similar. And we expect to scale this up to, over the next few years, we expect revenues to double. And margins are reasonably good. We expect margins to increase. There is possibilities of cross-selling, like we did with the Firstsource, which we acquired last year. And cross-selling is becoming a big thing. So I think the net revenues are growing higher than we had expected. Margins are growing higher than we expected from these acquisitions. And they're giving us either access to a new set of customers, or they're giving us a greater footprint in the areas that we are. And some of them are giving us footprint, for example, in areas like South Africa, where we wanted to enter. And that gives us a ready-made base. And then you have existing clients who are willing to offshore to, say, a country like South Africa. And that's where, for example, an acquisition like a Sensors comes in very handy.
Mr. Goenka, I'll come to AI and sort of workforce, etc., in a bit. But in the fourth quarter, you hit the $1 billion 4-quarter revenue run rate. I mean, well ahead of what you sort of guided for. Is there a new number for us, sir? A new target that you can sort of share?
We keep setting ourselves higher and higher targets, but I think we will stick to our target to the street at this point in time, though our internal targets might be slightly different.
That's a hint. That's a nice hint, but not revealing too much. Mr. Goenka, let me ask you this. We saw this recent deal, WNS and Capgemini, in the BPO space. So many tech companies that we speak with tell us that BPO work, along with so many others, so much else, is essentially going to be fundamentally transformed because of AI. You did say you've launched, un-BPO, right? Which is, you're saying, well, you want to focus away from labor arbitrage to technology arbitrage, etc. How far along are you? What will this require? Will the effort required to deliver the same amount is going to go down dramatically? I mean, depends on who you ask, 20 to 40%, in some cases more. How will this, where are we in that transformation, in that journey on the BPO side?
The whole AI journey is a new journey. It's a very young journey. So we are at a good point in that journey, but to say we have completely evolved would be a gross overstatement. I think it's evolutionary on a day-to-day basis. We made a small tuck-in acquisition with Jaipur-based, which is with very high-tech AI professionals. We are doing specific things in that area. So one is simple AI, when you use AI for repetitive tasks, which are routine. But the other is to use AI for forecasting, to use AI for actually adding a much more higher value to your client. And that is all in the process of beginning to help. I mean, and in terms of the value additions we are doing to our clients, it evolves every day. It's growing. And I think it is something that will keep evolving, will keep growing, hopefully.
You think, Mr. Goenka, your stated guidance is to improve margins by a certain amount every year. You think it's possible, or you think fundamentally AI in a way is deflationary? Because, I mean, if the work you do requires a lot less effort, at some point the customer on the other side is going to say, well, please pass on the benefits to me. So in that sense, I'm just asking direction of travel without getting into specific numbers on margins.
It's about sharing the gains that you get. It's not only about retaining everything. It's also about reducing costs. It's also about adding revenues with the same workforce. It is about, for example, our attrition rates have gone down by 13% in the last 8 quarters. So that's a significant margin driver. Our onshore-offshore ratio has gone significantly in our favor. So about 80% of the new seats that we've added in the last couple of years have been offshore rather than onshore. So all these things are helping. And so we are learning to share data with our clients and tell them that there is a benefit in it for them, there is a benefit in it for us. And is a very healthy, happy conversation.
Margin expansion towards your mid-teen target, I mean, that stays as is?
Absolutely. Absolutely.
That's great to hear. I mean, I had a bunch of other questions, but we will pick up on some of these as we go along. It's a conversation we need to have. I mean, earlier today, I had a discussion, Mr. Goenka, with two sort of technologists based out of India. They were based in the Valley, and the topic was, can we have our own sort of, deep tech? It was a bit of a cheesy, clickbaity title, but I think, can we have our own OpenAI out of the country, right? But I think it's the topic is real, and the discussion needs to be had, which we will do so here on CNBC-TV18. Fast evolving sort of landscape as far as tech is concerned. Mr. Goenka, thank you very much for joining us today. Really appreciate it, and look forward to many more.
Yeah.